Okay, changing tracks now. Touch base for another set of earnings. Anil Rai Gupta, who's Chairman Managing Director of Havells, joins in to talk more. Mr. Gupta, good to have you on the show. Sum up the quarter for us. It's been a muted set of numbers. What would you attribute this to?
Well, I guess the growth has been quite healthy. In Havells' portfolio, if you see, the revenue growth has been around 28%. The profit was impacted a little bit by the sudden movements in the forex as well as the commodity prices. Otherwise, generally speaking, if we take out cables and wires contribution margin, the switchgear, the lighting, as well as the ECD, both have all three of them have grown well, as well as the contribution margins have remained quite healthy. It's only in the cables and wires segment where there was a huge swing because of the commodity prices. I think this should settle down, and margins should also be coming back to normal levels. So overall, 28% growth was quite healthy in case of Havells, as far as Lloyd is concerned. This year, particularly the air conditioning demand has been muted, wherein we have about 70% share coming from air conditioners in the Lloyd brand portfolio. Also, because we are dependent upon imports there, the forex movements have impacted adversely on the margins. But I think these are all temporary factors. Over a period of time, this will get settled down. We are setting up a new plant for manufacturing air conditioners in India, in Lloyd. So I think there may be a little bit stress on the margin for a couple of months or so. Otherwise, we are quite happy with how the quarter has gone in terms of revenue growth.
Okay, so did the same factor affect Lloyd's performance, and when is it that we can actually see a pickup?
The only factor which was negative was the season impact on the air conditioners. Otherwise, things should start coming back to normal soon, and the festival season is also impacted a little bit, because last year Diwali was in October and closer to the second quarter. This year it's in the middle of November, so the major sales for this festival season should be coming back in the third quarter.
Right. Mr. Gupta, you know what, just urge you to stay with us. We're going to take a very short commercial break and be right back and chat about your earnings.
Continuing our conversation with Anil Rai Gupta of Havells. Mr. Gupta, thanks very much for staying by. What is the outlook on margins, if I could come to that? How much did the higher commodity prices and rupee depreciation impact margins? Will margins remain muted?
No, I think I would say, as I said, that in all the business segments, the margins have been healthy. It's only in the cables and wires segment where the commodity prices moved up suddenly, and hence there was a time lag in the price adjustments. And it has already been done, so I think it should be coming back to normal immediately.
Growth in the switchgear business continue. Can you take us through the big order wins in collaboration with Hyundai in terms of how much it boosted growth?
Well, Hyundai is still very new at this moment, so I would say the major growth factors have been an uptake in demand. The government impetus on infrastructure projects, especially in the rural electrification projects, that has also improved this demand uptake in the industrial switchgear business. So I would say general increase in the residential sector as well as the industrial sector. And I think hopefully, if not, this is also a quarter where the last year base was a bit low because of the new GST regime had come. So it should come back to normal levels, but it will remain healthy in the coming quarters.
Right. So has the electrical consumer durable segment seen an expansion in terms of your product portfolio, and will double-digit growth over there continue?
Well, again, as I said, there is a little bit of base effect because of the last year's special quarter. But we are quite hopeful on the electrical consumer durable business because, new product categories like water purifiers, personal grooming, they've also started contributing to the numbers. So while the traditional businesses have been growing very healthy, the new businesses are also adding to the growth.
Right. So why is it that lighting and fixtures revenues has been muted, and what would you then say is the outlook? How much will festive season aid growth?
Of course, as I said, last year the festive season was a bit early, so this year, major sales growth will come in October and November. So we are expecting lighting season to be contributing significantly to the growth in the coming quarter.
You do not plan any big bang acquisitions, but will focus on India and bridging product gaps. Can you tell us about your organic growth plans as well?
Well, our organic growth plans remain quite strong. We are investing close to about 500 crores in capital expenditure this year, out of which 300 crores is on the new manufacturing facility on air conditioners, and all the other product categories are undergoing expansion. So we are quite hopeful of getting decent growth in our organic growth plans in the coming years.
Anil, analysts are expecting earnings growth to accelerate to 20% CAGR over FY17 to 20. Would you agree? And if so, what, according to you, will drive the growth for you?
Well, I can only say that we're quite hopeful for the coming years. So if you look at the medium term, long term, all the factors are converging into a good growth pattern, not only for the company but for the country as well. So we are quite hopeful in the coming years that we should be able to get a decent growth, both in terms of revenues as well as profitability.
Okay, Mr. Gupta, good luck with that, and we'll chat again soon once you do have a handle on how the festive season demand is actually like.